I'm sure you have heard of VA assumable loans by now, but do you actually know how that works or what that really is? Well, I'm here to explain what a VA assumable loan is, how it works, and I'll be using a real listing here on Oahu to give you an example. So keep watching until the end. VA assumable loan in simple terms is when the buyer is able to take over the seller's existing VA loan, which is a great thing, especially in today's high interest rate market. As a buyer, you will need to qualify for a VA loan, and you will also need to pay the difference between the purchase price and the existing loan balance either in cash, or you will have to get a second mortgage on it. If you are considering getting a second mortgage, then most lenders will require 10% of the purchase price as a down payment. Here are a couple of things you have to consider though. The whole process of assuming a loan can take anywhere from 4 to 6 months. Also, you will have to qualify with the lender who holds a current mortgage. So is it really worth it? Let's take a look. This condo is listed at $715,000 and it is a 2-bedroom, 2-bath condo in Kaneohe. Now, according to the listing agent, the existing loan amount for the sellers is around $659,000 at a whopping 2.3% interest rate. And the principal and interest on that mortgage is roughly $2,888 per month. Now that means you will have to put $56,000 as down payment because the difference between the purchase price and the existing loan amount is $56,000. The second mortgage does not come into play because 10% of the purchase price already exceeds the amount of $56,000. So if you assume the loan, you are paying $56,000 in cash as down payment. However, your monthly payment, principal and interest, will be $2,888. Now, if you were to purchase this with a 30-year VA loan, you're looking at 0 down because a typical VA loan does not require any down payment. However, your monthly payment will be $4,472 based on a 6.4% interest rate, which was the national average for a 30-year VA loan on December 12th of 2023. And mind you, this is not taking the funding fee into consideration, which is typically rolled into the loan as well. If you were to assume this mortgage, then you would be saving $1,582 per month, and you'll be able to recoup that $56,000 down payment in just 3 years. So yes, I think this is a great deal and every veteran and military families should be taking advantage of it. Now, if you would like to learn more or if you would like to sign up to be on my email listing of all the VA assumable properties, feel free to reach out to me or schedule a free consultation using the link in my bio.